Thanks for continuing on with us. This is The Economy with me, Ibrahim Sani. Yes, you're not seeing a double image. It's not a mirage. I am who I am, and I'm back on the TV show. And of course, the reason is because there's a lot to be unpacked when it comes to the economy. So this show basically looks at some of the pertinent issues when it comes to the macro economy at large, but of course, the domestic level economy as well. Some of the ideas that we need to explore in the next few weeks is, of course, Budget 2025. That's going to be presented by the Prime Minister in about 2 weeks from now. And of course, we want to explore some of the wish list that comes from the budget, but more importantly, the performance of Budget 2024. It's been 10 months in the process, so we want to learn what we have done well, what we have done not so well, and what to expect in the future. Joining me in the studio, of course, is a good friend of the show, So Lian Seng, the head of tax of KPMG in Malaysia. So thank you very much for accepting the offer of being the first sacrificial lamb, I suppose, to come on the show. But it does feel good to be back, back on TV and start asking the questions again instead of being, being attacked and being asked myself questions. Yeah, Budget 2025 is bearing down upon us. What would be some of your core, I guess, remarks when it comes to Budget 2025? Perhaps a little bit of comparing and contrasting of this year's budget as well.
Sure. Thank you, Ibrahim, for having me here. When we look at budget this year, when we look at the theme for the budget 2025 is Ekonomi Madani, Negara Makmur, Rakyat Sejahtera. So if you look at that, of course, what I would like to comment here is by comparing 2024 budget and 2025, we anticipate that the government will broaden their tax base. But strengthening 2024 initiative is very important. One of the initiatives that has been announced was e-invoicing. As we know, 1st August has passed. And based on what we can see from the public information, phase 1 for the e-invoicing has successfully passed the test. And the number of validated invoices, if I recall, based on what the IRB has announced, already surpassed 35 million. So that part I will comment that the government has done well. Obviously, I cannot deny there will be some kind of hinges here and there, but I think this is a journey. But interestingly is to see phase 2 and phase 3. How is the government going to take care of this group of taxpayers, where primarily we are looking at the SMEs and the small, really micro, small, medium enterprise. So that will be interesting.
There's also that element of this budget has to be comprehensive to address some of the constituents in Sabah, Sarawak, in the rural villages, because let's not kid ourselves. A budget is a political tool as well. Do you think that there's going to be much more considerations in terms of how the budget is going to affect the small folk, especially from the not so traditional voter base areas?
So if I were to comment from the tax base, I would say what we have seen in the past, the government will provide an inclusive kind of budget basis. If I were to compare, say for example, what has been announced for corporate, in particular the SMEs, there were many tax incentive that has been put forward. So 2025, I would anticipate or hope that the government can consider some of those incentives to be extended. For example, now the government is promoting greens, for example, and also promoting the economic growth for the SMEs. We note that 2024 budget, when we talk about the capital carbon tax, the carbon expenditure to be given a deduction. So that has been announced in 2024 that it was proposed. Tax deduction up to 300,000 be given to companies for costs incurred on development, measurement, reporting, verification related to the carbon projects. What we can see, there will be more announcement in terms of whether the mechanism or not, but we are hoping, like in this case, the government can expedite the PU order, because currently it has not been gazetted yet. So though it has been announced, but it cannot be utilized.
Of course, it's not being gazetted. How can you utilize?
Exactly, it has not been utilized. So that part can be done better, the way how I see. And not just this particular PU. I think there are also a number or PU that currently perhaps in progress of expediting the Gazette.
Well, I'm going to be asking you a few questions as well pertaining to multi-year tax framework. But before we jump to that, my final question for this segment at least is on the topic of continuity and political stability. Do you feel that that whole political risk premium has not dissipated and we're going to have a very stable government for the next 3 to 4 years maybe? And do you feel that because of that, some continuity in terms of tax policy can be seen, and it's expected even, especially for folks like you, looking at tax and a keen observer of tax policies in the country?
I think so far what we can see, the government has put in a lot of effort in terms of having a political stability. That's why we can see the government has come up with quite a number of policy in raising the cost of living, even talking about the subsidy and all that. So I believe that those efforts that the government has put it in is a matter of, I would say, managing the rakyat expectation. And this is also to provide the social equity. So for my input, when we talk about that perspective, I hope that the government will look at, in terms of the income tax individual brackets, there were also discussion to talk about whether is there a need to do a comprehensive study where current definition of B40, M40 and T20 need to be redefined. Because if you look at our tax base currently, it's based on individual income base rather than the household base. So there is something that can be studied further to see how can we improvise it, for the rakyat, in terms of that. That's one aspect. In terms of the SMEs, probably we could see the kind of concessionary tax rate to increase the growth of the SME, just like what we have seen in the Forest City announcement, for example, which I believe more detail will be announced. But is that kind of incentive, targeted incentive may be given, in terms of providing the business stability environment.
All right. We'll take a short break. When we come back, we'll discuss a little bit more with KPMG on tax. Thanks for staying on with us. I have with me Solian Seng, the head of tax of KPMG in Malaysia. Let's talk a little bit more about the idea of multi-year tax framework.
Sure. Thanks for that question. When we look at the theme for our budget, economy madani, so we know that for the past 2-3 years, there is these priorities that the government have put in. Question is, how do we then accelerate this economy madani? So probably to go in line with this concept, what is important is the investment that we must give the priority to investors. Not just a priority, but the comfort and also certainty to this investor. So the concept of multi-year tax framework basically is to provide a clear policy that set out and express what the government intend to do for the next 2-3 years perhaps. So unlike now, for example, when we look at the current budget, it is more on the yearly basis. So if we have that clear policy on the objective, even on the what they call that objective and the reforms that perhaps the government intend to do, and also the tax administration and compliance, and also the incentive and exemption, then all that can provide some of certainty and be a country that can stand out compared to other countries in this region. So that is a brief concept.
Okay, but this, while you're basically the notion here, or the spirit here, is looking for a clear tax policy and a continuity. A 3-year plan would be suitable. It also fits in with the government mandate, I suppose, before the general election. But some of these rates can be fixed for a number of years. But doesn't that provide, doesn't that block the government from being a little bit more nimble in terms of how they can manage tax rates and tax-based policies to a point where they are a little bit more attuned to the pains and the cost of living impact on the government. I'll give you a little bit more illustration. The subsidy, the diesel removal, for instance, have resulted in higher cost of transportation and logistics. It does create an environment where it does create a higher cost of living. And then, of course, the RON 95 subsidy rationalization, is it going to happen? Is it not going to happen? When is it going to happen? Those kind of arguments. And then, of course, that whole impact on M40, or however we redefine the middle class of Malaysia. And then, of course, with the higher cost of living, we have thinner wages, thinner disposable income. Then the government doesn't have that kind of room to create that tax exposure and tax mechanism to help or ease cost of living. For instance, if you are taxed at a 26% bracket or 20% bracket, can you get a holiday, a tax holiday for, let's say, 3 years? If we have that consistent tax policy, doesn't that provide a fixed kind of environment, and that does not provide that nimbleness?
Well, I beg to differ from that perspective. When we have this framework, it actually provides more clarity in terms of the objective you want to achieve. But this objective doesn't mean that it's so rigid that you can't actually have any revision.
The word I'm looking for was rigid. Thank you, so yeah.
So it should not be so rigid in that sense. But at least from the investor's point of view, if you think about it, if I'm able to give a journey of 3 years, that what I intend to do, that at least provides certainty from the investor point of view. But for whatever reason, say, when come to the end of the second year or beginning of the third year, there may be circumstances coming from the factor of the external factor of the global, for example, that require us to revisit. I'm sure on that score, investor would definitely understand why is there a need to tweak. You know, so this platform, or rather framework, is just to provide an avenue for investor when they need to invest by comparing us with other countries.
Speaking of investors, capital gains tax. Much has been talked about it. There's not so much progress when it comes to advancing CGT. What's your thoughts on this?
Yeah, thanks for that question. I think this CGT is one good example where currently, when you look at one of the conditions, they're talking about the substance capital gains tax, which currently only provide for 3 years. So to provide certainty to investor, obviously, one ideal suggestion here is to convert the 3 years exemption into permanent feature, so that when investors come, when they invest in this country, it's not for 3 years, it's for long term. So by take out the exemption of 3 years to permanent feature, just imagine, investor would know what and how to calculate their returns of investment in that sense. That would actually encourage more investors to choose us. I mean, this is one example, to choose us as one of the investment hub. But beside that, of course, if you look at other countries for that reason, the scope for CGT can always be expanded. Of course, I am not suggesting the government to execute now, for example, to include the individuals. But if by comparing of other countries, it's a matter of time, the scope will have to revisit.
The classic argument against CGT is that you are not creating a robust environment for investors to come in. Retail investors, for instance, Speed 99, for instance, wouldn't see a 40% jump if you have CGT, I suppose. I don't know, right? These are all theories. Is that going to happen?
Well, in one aspect, like what you say, we do not know the facts and all that. But if from the investor's eyes, I would say with the certainty, then obviously that can help the situation.
Let's talk about opportunity cost.
Yeah.
What happens if the government doesn't look at a multi-year tax framework? What's the?
Okay, it doesn't look at a multi-year tax framework, which is currently what we are facing. We'll go on the year-by-year basis.
Yeah.
And with the year-by-year, there are a lot of areas for improvement. I think the one I have quoted about the PU order that is not gazetted. So if you reflect on the year-by-year from that perspective, while year one, the intention of the government is to promote, say, green. Like in this case, the one I quoted about carbon tax. Yeah. But by the gazette order not out, how are we going to execute it? Yeah? So, but at least say, for example, it's just an idea on the multi-year tax framework, you know you have a framework to meet. When you need to introduce so-called A, when should the gazette or the law comes in? And this got to work hand in hand together for effectiveness perspective.
Okay,
Yeah.
I hear you. I see that point, but there's also other things that we need to talk about. We don't have much time left.
Sure.
But some of the items that we need to talk about include high value goods tax. We can also talk about property tax when you say sell the property. There's also that element of, if I'm not mistaken, the last time we spoke of small value goods, you know, and the big hoo-ha about it when trying to protect the local manufacturers, something like that. Do you think that these bits and pieces, these bibs and bobs, actually does advance the widening of the tax bracket, or tax base, pardon me? And of course, that's one idea. Another idea is, isn't the rich being taxed enough? Already we are asked to pay, we are asked to pay a lot more at the petrol pump. We are asked to pay more for our education. We are asked to pay more for, you know, goods and luxury goods. All in all, if the B40 can't spend, and then you're reducing the public expenditure, and then of course the rich are now unable to spend, you're reducing the public expenditure, where's the growth going to come then?
A very good point in terms of that. Maybe I address on the high value goods tax. My view, well, 2024 that was announced and it's supposed to be implemented on the 1st of May, but then it was postponed indefinitely. The way how I see this coming budget, the details or the implementation will carry on, I believe. In terms of the rate, it will remain based on the proposed earlier rate of 5 to 10%. Now, based on forecast, what has been stated, this can give about 700 million additional revenue. So if you ask my view, things like this VGT, if we go according to the plan, then definitely there will be the additional taxes. But another point to note when it comes to 2025 is the global minimum tax. That in Malaysia is scheduled to be implemented in 2025. What we can see this coming budget, we anticipate the government may come up with some mitigation strategies. Because when you talk about GMT, most of investors, foreign investors that set up companies here, with the incentive will be impacted. So if you compare to other countries, Singapore for that reason, they have announced of a scheme of refundable investment credit scheme. And that basically is to boost its appeal for high value investment. And how it works, it actually offers businesses up to 50% support on each qualifying expenditure category with a period of up to 10 years. And that, I believe, will enhance Singapore's position as an investment hub. Thailand, for that reason, has announced Competitiveness Enhancement Fund. Then how it works is subsidize targeted industries. Vietnam, for another reason, established the Investment Support Fund, which will be financed by the top part tax collection under Pillar 2. So you can see that countries like this have already made the announcement. So investors who have investment in this country will definitely start to compare. This is very interesting. We anticipate this coming budget, Malaysia may announce what are the mitigation factors in terms of this.
I want to circle back to what we spoke about before the break, which is the small and medium-sized enterprises, and some focus has to be given there. Say, for instance, bodies like the MEF or the Malaysian Employers Federation is asking for a bit of a break in terms of minimum wage, for instance. They're asking for bigger tax breaks, especially for businesses or employers with, let's say, below 10 people or below 5 people. I mean, there's a lot of wish lists coming in from MEF. I mean, you know, they won't. If there's one thing that they're good at, is coming up with wish lists. Is there some good faith listening to folks like the MEF, for instance, in trying to propagate the interest of small and medium-sized enterprises and micro enterprises as well? Yeah.
I mean, on that score, I would agree. What they have proposed, those wish lists, basically, if you look at it, is to help the SME or MSME in terms of business. Right? But if you were to look at the employee themselves, would there be any benefit, or are we anticipate any kind of announcement that can be made? For example, like what you mentioned about the federation that announced all this. I think basically it's just to manage the costs. So that itself is, we see the escalation of the cost of living.
Yeah.
Right? Yeah. So we hope that the government will consider from that aspect to manage that cost of living, to revisit the personal relief of 9,000 currently that we have, to increase that. Another example is the, what do you call that, the 6,000 relief for the OKU. That has not been revisited since 2005.
Oh, really?
Yeah.
Okay.
Yeah. So this too is to manage the relevant group of individuals. I suppose it's a good time, in view of the rising of costs, to revisit such review. When you talk about income tax bracket, well, that has been revisited last year. So that if
But
ever they
reliefs
want,
reliefs.
yeah, but I think it's more on the relief that government
Child relief.
can consider.
I want to have, you know, a bigger quantum for child
Yeah,
relief.
why not?
It's not, it's cheap.
Exactly.
It's not cheap.
Yes, yes, that is totally true. So that would address some of this point, you know.
And then,
in
of course,
terms
as the
that.
country ages, sorry, I'm just still on the point of child. My daughter has just entered university, so I'm not feeling the pain of it. As Malaysia ages and becomes an aging country, there's a lot of impact towards taking care of the elderly. There's also a lot of impact in taking care of children who are now entering university. There's a big bulge. When you look at the population pyramid, it's a bulge, it's a diamond already. It's no longer a triangle, an isosceles triangle. So yeah, there's a lot of impact on the sandwich economy, where, you know, folks like you and me are supporting one generation up, if not two generations up, and one generation down or two generations down. It's tough.
Yep. I think I would agree with that. So of course, to encourage that, if you come from the tax perspective, maybe some kind of relief, or when we talk about old folks, maybe to increase that relief for medical, for example. But you talk about students that study in university, yes, I will welcome the idea of increasing the child relief, especially for the university student. Yep. Final
idea. I spoke to this with some of the other colleagues of yours coming in from the other big four. Automated tax forms. I remember Farah Rosli, I think you would know her.
Yes.
She was going through with me, let's see how good my memory is. Huh? She was walking through with me the progression. It was like that before, and then it was self-assessment, and then why not do it again? That saves time. Now even more because AI lah, everything lah.
Yep.
Are you in support of that kind of idea?
Oh yeah, I think I'm in support of that kind of
idea. So we revert back to how we did before the self-assessment came about?
But not really. When you talk about technology and you're talking about this AI, I think this is the part where we could see the positive impact after the full implementation of e-invoicing.
Yeah.
So
you mean you're not just talking about, say, revenue companies of this, this rate?
No, I'm
rate.
talking about the full implementation.
Yeah, it should be automated lah.
Exactly. So you can imagine if everyone is in the net, so all the figures can be populated, not just the revenue side, even the expenses side.
Yeah.
Right?
Because what is revenue if not measuring expenses as well?
Exactly. So if I were to take, for example, my personal tax return, currently, obviously, when we talk about EA form, that itself is also submitted to the revenue.
Yeah.
So it can be populated automatically in my tax return.
Yeah.
The other one, say for example, I spend hospital fee for my parents. That is where I will spend at the hospital. With this e-invoicing, they will pick it up that who actually spent that. I won't be surprised if the technology can actually integrate all this information. It will definitely populate it in my tax return. That straight away I can see what is my entitlement for the relief.
Yeah, and then of course if I'm unhappy or there's some updates,
I can.
Okay lah, edit lah.
Yeah, exactly.
Final question, so is on the topic of optimism or pessimism right now. You've been at it for, I don't know, decades now, and you've seen from one government to another. This is the third Madani government budget, and we should know the mood, the tempo of it already. It's been the third year running. PMX is going to be presenting this in just a few weeks' time. is Malaysia heading in a better direction or in a poorer direction? Generally speaking, of course.
Sure. My view, if I were to put it from the tax perspective, I think there are many developments. When we start to compare 2024, you have the e-invoicing, you have the CGT, even now with the Pillar 2 coming, and I won't be surprised depending on the timing, whether the reintroduction of the GST, they're coming in. These are all tax reform. These are all tax reform and initiative. If only this can be implemented well, utilization of some of this law, my view, we are moving towards the right direction.
So execution risk.
Yes.
Okay, so same. Same. I remember you saying something along the lines of execution. You can't run away from that. It's all recorded now. Anyway, I would like to speak more about this, maybe get some early comments from you again after the budget is being announced. But for now, that was So Lian Seng, the head of tax at KPMG in Malaysia. It's been a particularly breathtaking moment here. Only because I haven't been doing this for a year now, and I can't get, I can't wait to explore this further. If you want to learn more about some of the tax work that they are doing, head off to KPMG's website. Also, So is a pretty prominent person that talks about a bunch of things, including in this week's The Edge. So do check that out, where he and many other of his compatriots are discussing some of the tax elements regarding Budget 2025. For now, my name is Ibrahim Sani. Catch us on astroawani.com.